Hello, everybody. Signs of a recession are here. Kirk Spano, Macro Dashes, Global Trends ETF, Blue Mound Asset Management, Fundamental Trends, Margin of Safety over at Seeking Alpha. Just recorded an investment experts podcast with them yesterday, so I think it should be on Seeking Alpha today or tomorrow. And looks like I might be co-hosting a regular Saturday morning show with Seeking Alpha coming up. I don't know if it'll be every week, but it'll be pretty often. I'll be a regular contributor, it sounds like. And we just got to work out the details. And some of the things that we talked about are, are we going to get a recession? How's inflation doing? What do earnings look like? How do we follow all of this? How do we put it all together? Well, one of the things, and we haven't talked about this in a while since the price of lumber was spiking, but you keep an eye on the price of lumber, and that'll generally give you a pretty good clue as to what is going on in the economy. It is pretty forward-looking because you got to buy your lumber before you build something. So it is a good 3 to 12 month forward look at the economy. Now, I'm going to show you a chart in a minute, but I just want you to understand something. Lumber has seasonal tendencies, right? They want it in the spring so they can build during the good weather in the summer and fall. But right now, mortgage rates do not support new home construction. Now, there was a little bit of a bump recently in new home construction, and we'll see if that is really an uptick or if that was just pent-up demand. I suspect it was pent-up demand. I've been telling you that I keep looking for land where I can build and then subdivide. It is difficult to find anything because the prices still haven't come down to 2018-19 prices, which is what I'm looking for. I love 2016 and 17 prices, and I love even more 2010 and 12 prices, but I don't think those are ever coming back. So I think that is gone. I think there's enough inflation that you just have to price things based on your income and savings versus the price and figure out if that percentage makes sense. So if you're buying a house, just a little insight, the bankers will tell you that you can use 40% of your income to buy a house. And I will tell you, if you're buying a house with 40% of your income, you're insane. That leaves you no wiggle room, and you better have a lot more income coming soon. In general, you want to keep your real estate expenses in total, taxes included, and any insurance included, at somewhere between 25 and 30%. I'm down around, I'm in the teens somewhere because we're living, like I said, a little bit beneath our means to save up to do some bigger things. And, that takes years. So while I can afford $600,000, maybe even $1 million house, I live in a $200,000 condo because we want to buy land and we want to have multiple properties and do things like that. So there's sacrifice involved with saving for bigger things. And that is something that 80-90% of the population never wants to do. Everybody's always overextended. If you are in that 10 to maybe 20% of the population that will be a little less spendy, a little more frugal, without getting weird about it, then you should probably do very, very well. All right, so let's take a look at these lumber prices. You can see that in the 1990s, we got into a new range. So lumber was super cheap in the 70s and 80s because we were just, basically cutting everything down. Conservation wasn't a thing. Then all of a sudden we started doing conservation. We started managing the lumber. We started to grow the economy after we got rid of inflation in the 80s. And we've been in kind of a new range. Well, lumber spiked, right, in 2020, 21. It was hard to get lumber because everybody was doing a home improvement project during COVID. They're like, I'm going to be home for 4 months. Let's build that deck. Let's put in a new staircase. Let's add on another room to the house because now I need a home office. And that has all started to come down. Now, the price of lumber, and this isn't a great chart for looking at it, what you'll see is that anywhere you see the price of lumber falling for an extended period, at some point you get a fall off in the stock market, which was accompanied by a recession in most cases. Now, we've had the spike in lumber, which probably included a lot of pent-up demand and pull forward, right? Because people had the time for the better part of a year to just build stuff on their own property. So all of the lumber was getting bought. Everybody was building something. Now, interest rates are higher. In addition to all those projects being done, and the price of lumber is plummeting. People still say to me, Kirk, it's just so expensive to build a house because the lumber is super expensive. They're a year behind. They're 2 years behind. People are always behind. They heard something last year or the year before, and they think it's still true this year. And it's not. Lumber is basically a normal price again. So I'm buying lumber to do a project in my basement because it's cheap again. I want to do the project up here, but I didn't want to spend double or triple for the lumber. So I'm buying lumber now to do a project. And hopefully it retains its value. I think it will because we're adding a room to the house or to the condo. Now, when lumber prices come down, there is a direct correlation to a slowdown in the next 3 to 12 months. And we've been seeing that clearly. We've had a bear market in stocks. The economy started to slow down. Most of the inflation indicators are tipping over. The most important one, energy, has even come down, but it looks like it's about to go back up, which is why the Federal Reserve has to be vigilant. They have to pay attention. So all you need to know here is that this is signaling a slowdown in the economy, and the higher interest rates are tied to that. Now, how low does it go? I don't know. I don't know if we fall off a cliff or not with the economy. I suspect it's just a short, shallow recession of maybe 3 quarters, maybe for a whole year. But I don't think it's going to be fall off the cliff type of recession. I just think it's going to be GDP numbers around 0. So if you take a look at FactSet, they talk about all of these different indicators. This is talking about the tankers in the world, the transportation. And what we can see here is that the crude tanker market has been and remains the strongest market. Why? Well, it's because several years ago when oil was super cheap, what do we remember? Do you remember talking about with me that there was all kinds of rigs and tankers that they were beaching, basically? I mean, they weren't beaching it, but they were getting rid of them. So they got rid of all sorts of tankers and offshore rigs, and the oil industry contracted. Now, with the tanker fleet that's out there, it's pretty much all spoken for. You can't get a tanker, it's expensive. But if you take a look at the Baltic Dry Index, right, basically that's driven by globalization, trade back and forth. Something else has been going on in the last year. You have seen the Baltic Dry Index drop a ton. Why is that? Well, the growth in global trade has pretty much ended and even started to contract a little bit. Not much, just a tiny bit, but it let the pressure out of this inflationary force. So now to transport something, prices come down. There's even a little bit of slack for everything other than energy exports and imports. And this also, you can see the correlation. That comes down, S&P 500 comes down. But in a world where globalization is flat, right? The AI and the machine learning is going to move supply chains all over the world. You're going to have less things that get transported, but you still have to move resources and high-end things and low-end things. It's the middle of the market that probably is produced domestically now. And the high-end and the low-end, those will still move around, and the commodities will still move around. So when we take a look at all of this, we start asking questions about, well, what happens when not all of those crude tankers are spoken for? What happens when we're using less oil? And I think it's pretty obvious. That becomes a major deflationary force on the economy. When will that happen? Anybody got a guess on what year? I bet we've said it before, right? So in about 2026, because of what's going on in automotive manufacturing, pretty much all the EV plants will be open and full running and supplied, and all those supply chains, in fact, will probably be done by the end of 2024. And then they will start making the 2026 model year EVs in 2025. And you're going to see a dramatic reduction in the internal combustion engine cars available by 2027 or 2028. In fact, Ford has already said they'll stop making ICE vehicles for Europe after 2027. GM has said 2030. There's laws on the books in California and around the world that they can't sell ICE vehicles starting in 2035 or 2040, depending on where you are. Markets adjust ahead of time. Once again, all these things point to a transition in the economy. It's not going to last forever. next few years. And then basically we'll just be living on legacy ICE vehicles. As they retire, they're not going to come back. And that'll take a long time. Gasoline is going to get very cheap at some point. I mean, there's 100 years worth of oil on the planet, at least at current use. So that means there's probably 200 years or 300 years of oil on the planet at dramatically reduced usage. And there's going to be a period, probably during our lifetimes, who knows what it looks like after that, where the price of oil gets down to, say, $40 a barrel again. And kind of will be in that range for a very long time. We know that the frackers are in trouble, and I'll show you that in just a second. I would expect that there's another leg down in this stock market. I think that everything is playing out roughly how I've suggested. We've been hovering around 4,000 on the S&P 500 for the whole year. Started up, went down, got a little rally going now. I can show you some reasons why that might be going on, and then we'll finish with why it's probably going to end relatively quickly. Dave Rosenberg talked about what I just talked about. We've pretty much beaten inflation. It's only two places where we have to worry about inflation, and one of them really shouldn't be a worry short term, and one of them really shouldn't be a worry long term. The energy, of course, is a short-term concern because of OPEC and Russia messing with supply and China increasing demand. But lumber prices have come down. The signals that the economy is slowing down right now. I know that makes people fearful, but the reality is that it probably won't be that bad because why? We're at full what? Employment. And even if the rate of unemployment goes up 1%, which I think over the summer it might, at least in certain industries, particularly tech and in industry where they can cut middle management and cut jobs where AI is going to handle it, because the AI can handle all the mundane tasks. So if you have a mundane task job that's not terribly creative and doesn't require a lot of customer service, that's the job that's probably at risk, along with the middle managers who like to look over shoulders. You're not going to see a lot of loss of jobs in anything that's actually building something, because people still have to run the machines. And we're getting more efficient, and the cars are going to require less parts. So that's important to consider, because the auto industry is one of the biggest industries in the world. And when you take a look at what it touches, it's a big deal. You just keep coming back to the fact that between demographics and technology and the fact that we are figuring out how to use less commodities in almost everything, deflation is going to be what we're talking about in 3, 4, 5 years. Inflation is almost beat. Real estate prices are starting to come down. Energy prices still could spike one more time, and I think they probably will. Oil in particular. I think natural gas will just be firm, but we'll take a look at natural gas here real quick. Price of natural gas has collapsed. Why has it collapsed? Well, if you take a look, it's about a 15% decrease in natural gas consumption year over year and below the 5-year average. That has led to a collapse in the price of Henry Hub natural gas. So here that is. What should this chart tell you? Two things, I think. One, we had a pretty warm winter, didn't we? There wasn't a lot of demand for that natural gas to heat, just the way it is. In the United States, I got a feeling we are all going to be running our air conditioners this summer. It's already starting to get warm here in Wisconsin. Climate change is real. I'll say it again. You can decide how it happened, but it's real, and we're going to have to adjust. Go back to oil. You see that oil has come back down into what I would call the normal range. I think the future is that oil will be down here, right? Eventually, prices get back down here. But I think for right now, we're going to chop. I think we're probably going to chop higher soon. And that is what you have to watch the Fed for. The Fed does not want to see oil get expensive into the election. It's the way it is. So what happens if the Fed raises interest rates another time or two? And their current language, the things that they've been saying in the last couple of weeks, is that that's what they're considering. We don't think we're ready to pause. We don't see interest rate decreases this year, and we might have to raise 1 or 2 or 3 more times yet. We don't know yet. How can they not know? I can show you all these numbers that show that inflation is coming down in pretty much every important area, except that energy remains a risk. What can Russia do to push the price of oil up? What can OPEC do? How much demand will there be from China this summer? My guess is a lot. That's why all the crude tankers are spoken for. They're not an empty crude tanker on the planet. Think that through. Dial your phone, dial the number, say, hey, I need a crude tanker. Yeah, you and me both. Go build one. And not a lot of them getting built either. Why? Because they know that in the long term, they're not going to need them. So they're just operating at capacity right now. So the Fed is worried about another spike in oil. And that's why interest rates probably aren't coming down this year. As long as employment remains up and unemployment remains down, the Fed has cover. It's not until employment starts to really push 5% that they have anything to worry about. So I would keep an eye on that. If unemployment gets to 4 or over, that's when you can really start thinking about Fed rate cuts. I don't think that's going to happen for a while, especially not before summer is over. Everybody who wants a job is going to have a job in the summer. A lot of these tech people are going to take some time off, but they'll be back to work towards the end of the year. So there will be some smoothing. There'll be some rotation. But as I said on Seeking Alpha yesterday in our interview, we're a fairly xenophobic society. And that's really almost all societies on the planet. Immigration is frowned upon in most places. Shouldn't be, but it is. You have to decide what is and what should be. And you got to realize that I can try to change things to what should be, but I have to live in the reality of what is. You're not going to get the 30 million immigrants in the United States that we need anytime soon. 30 million. Why 30 million? Well, we have about 10 million jobs available, not enough people to fill them. And as the boomers retire, going to have to replace them in the workforce. And in particular, we're going to need all sorts of healthcare and other sorts of ancillary services for senior citizens. 30 million immigrants doesn't give you 30 million people to work. It gives you 2 adults and 2 kids, basically. In most cases, you are importing families. Maybe you get 1 full-time worker and a part-time worker out of that. And then the kids add to the labor force 15, 20 years out for the children that we're not having here right now. It would be nice if we saw a slight uptick in population growth. Nothing dramatic. We don't have to have 9 kids again or 7 kids again like my Italian relatives were doing a couple generations ago. But we need a few more people. Now, there are tons of people all over the planet that would love to live in the United States. We should figure that out because that could prevent an inflationary spike in healthcare. And an inflationary spike in healthcare and related services for senior citizens, that is the one risk that we really have financially and economically in this country. All right, jumping back over to oil. This is what could drive the price of oil up. OPEC is going to stick to its current oil production plans with the cuts. So OPEC Plus includes Russia. This is today. Shale drillers can't really increase production much more than they already have. They're going to set a record this year, but that's probably it. It's probably going to be the all-time high because, 1, the banks are tightening up on them as part of general policy to lend less to fossil fuels. 2, because credit is getting tighter. Remember late last year, I was talking about how I just had all this credit dumped on me? And that usually happens right before a credit tightening. And just a few months later, that's what's happening. So the shale drillers were starting to find it harder to borrow and finance their operations to begin with, just because of pressure on that industry in general for environmental reasons. Now we have a tighter credit environment. And what have all the shale drillers done? All along the way, what did they do? What oil did they drill first? The hardest oil or the easiest oil to get to? They high graded. They got the oil that was easiest to get to for the last decade, 15 years. The oil that's out there for them to get is more difficult and more expensive to get to. And a lot of the people who left the oil drilling and services professions in 2020 and 21 and 22, some of them are never coming back. In fact, most of them are never coming back. So there's even a labor shortage there, even though they are making good use of AI and machines that are smart. So we're probably going to see the peak in U.S. oil production this year or next year. There might be some ancillary that's already in the pipeline. But remember, shale projects, they're basically on a 90-day window, maybe 6 months. It's not like building a rig in the ocean that ends up being a 3 or 4 or 5 year project. And that's after it's green lighted, which might take a long time too. Once they own these acres, they can decide to drill it and have oils, within 6 months. So if credit's a little tighter and the environmental conditions are getting tighter and the oil's getting harder to get to in the shale, you're pretty much peaking out on U.S. oil production, let's say 2025 at the latest. But, that coincides with what? Again, the advent of the EV age. Right now, 9% of U.S. car sales are EV. That's going to be about 11 or 12% this year, right? 9% last year. It's going to be 11 or 12% this year. By next year, as more and more supply chains come on, more ICE vehicle plants get closed. Ford's closing a couple more. GM's closing a couple more. By next year, we're going to be around 15% of all cars sold EV. Then we go into 2025 and 2026. By 2027, I will go out on a limb and say we're at 50% EVs being sold, new cars. And I'm not including the heavy duty trucks, just anything that you would drive back and forth to work if you're not carrying a huge tool set. 50% by 2027, probably. What does that do to the price of oil? So, oil price recovery, Houston Chronicle is saying, depends on market confidence. Yeah, I think it just is going to be a reaction to something that happens geopolitically. A little bit less supply, a little bit more demand in the short run. People will get FOMO, they'll chase it. But if you own any shale stocks, with the exception of Permian Resources, I'd be getting rid of it. Every other investment that you have in fossil fuels had better have a transition plan. So I own Occidental, but they're a carbon capture company too. I own a Metis, which is basically a plaything for traders right now, giving you a wonderful long-term opportunity to buy it. They do carbon capture. They do sustainable jet fuel, renewable natural gas. They have tallow contracts now in India. Tallow's a big deal. I always think of the movie Fight Club when I think of tallow. So when you take a look at what's going on here, again, a lot of moving pieces, but if a company doesn't have a transition plan to the cleaner energy future, not completely clean, but cleaner, and understanding that we have to get the carbon neutral as quickly as possible, and we're going to fail from what I can tell, till people start dying of heat strokes just walking down the street. I don't think we're going to do what we need to do, and by then it'll be too late, which is why I'm trying to buy land that is in the northern part of the country near water versus in a desert. And I love Vegas. I love to do Vegas, but honestly, if I do Vegas, I might rent. As you can see, I've been shopping for jewelry. We talked about that before. All right. So this comes back to my thesis. Bear markets rarely, if ever, end without a capitulation. 2014 to 16 was an exception, where we just had the choppy market for 2 years, two years and a quarter. We'll see if we get a crash or we drift down. But know this, the Fed would like to see valuations continue to come in, and the banking sector is continuing to fight the Fed just like the stock market is. I think that fighting the Fed is a dumb idea. I think the traders will pound their chest and stomp their feet and say, look at my trade, right? But they're only going to show you the good ones. We know from IRS records that 4 out of 5 traders lose. I think rather than trying to chase something, you should let things come to you. Let things go on sale. Right now, the small and the mid caps are on sale. I don't know how long they're going to stay on sale. Actually, I kind of do. I know what's going to drive the rise in small and mid caps. I just don't know exactly when it's going to happen. And it's when financial conditions start to loosen up again, which is probably, it looks like, next year, because they have to be careful with inflation that's driven by energy. If it wasn't for that, I think the Fed would have paused a couple of weeks ago. And I don't know if they're going to pause in May or not. I think if the stock market just keeps pushing higher and it doesn't have that last step down, I think the Fed is going to jam it to him. He tried to jam it to him a couple of weeks ago and it still didn't work, even with 2 massive bank failures. And the rotations in the market are quick and sharp, but the averages stay about the same. So right now we're seeing this big rally in big tech. Somebody asked, did I miss it? You never miss it. There's always another one. But I think there's enough smart people who realize that what I've said all along is that until the government really starts to break up these monopolies or oligopolies, you're not going to see a whole lot of pressure on big tech, right? Microsoft is going to get some of the search business from Google, but Google's going to add AI too. Right now, there's a big push to get AI projects to pause until there's regulations on it so that we don't accidentally create Skynet or whatever, clone army, whatever. There's been writing about what we're dealing with right now, going back a century, talking about how are we going to deal with biotech and genetic innovations. I was reading about that stuff that was in college that was written about in the 70s. Jules Verne. I mean, think about what science fiction has talked about for a very long time. Well, we're running right into it right now. And it's important that we deal with it ahead of time because of the powers that can be unleashed with technology today can be good and they can be bad. We could have almost free energy someday, very limited input costs, or we could blow up the world. We could cure a lot of diseases or we could create new ones, let lab projects escape out into the world, shut down the economy for a year at a time. We could let the AI take over the internet and completely mess up our minds, which are already stretched to their limits, I think, or closing in. I think I want to start doing career days again for schools and just explaining to them what bullshit is. That'd be my contribution to them finding a job and a purpose, is helping them identify bullshit. So I think our bullshit detectors are a little bit broken right now. And that plays into your investment thinking. If you can't sniff out the bullshit, if you're going to keep asking questions that are bullshit questions, right? Finding the right answer starts with asking a good question. And I see the comments and articles all over Seeking Alpha and all the other financial press. It is clear to me there's a lot of people talking their book. They want to put out narratives that support their trades. There's a lot of fucking stupidity and ignorance, naivete, a lot of naivete. It literally cracks me up that people think there's not lying, cheating, and stealing going on across the economy, from stocks to gambling, big business to healthcare. If there's a big pile of money involved, somebody is angling. Do you know that term, angling? Trying to come at it from a less than genuine approach, not being completely honest. Stock market is full of bullshit. Society in general is full of bullshit. And the best you can do is try to filter it. And AI is making that harder and harder, as we've seen with Facebook and Twitter and now ChatGPT. Reddit is driving a lot of the stupid trades that are out there. So I'd encourage you to sniff out the bullshit. And when you make investments, think about this. If I were the owner of this business, not a shareholder, if I were the owner of the business, would these numbers make sense to me? Think about it that way. If I was just running this business, could I make money? Because some of the valuations are still messed up. The fact that people are running from trade to trade to trade to trade, trying to keep up with the people who are creating the narratives and the supercomputers who are front running the trades. At some point, there's a comeuppance. There always has been. There probably always will be. It's why Buffett says just buy an index versus trading, or buy Berkshire Hathaway. That's why I tell you, use our ETFs for asset allocation, then add some small and mid cap stocks. If you can get large cap value, great, as long as there's underlying growth. That market is very efficient, meaning that the information is out there. So it's hard to buy large cap stocks at a discount. It's very easy to buy small and mid cap stocks at a discount. Then you have to be patient until the world realizes what these stocks are and these companies are, and you let them grow. And then when FOMO happens, you sell into the FOMO. I'm telling you this again because we're getting to the end of the buying period, just as we get to the beginning of it, right? We're a year in. Maybe we got another year to go when you should be accumulating good ideas. At some point, the Fed's going to loosen up again. Then people are just going to go nuts and buy everything. And especially, remember, I started selling 401k plans again, and I did it for a couple of reasons. One, because there's better products and it's easy to sell. But two, we're going to be at full employment a really long time. Talk about job security for me with 401k plans. A good recession is good for me too, because then I just get the rollovers. I expect the stock market to drop another 10% from the top. From the top, I mean the large caps. Small caps and mid caps probably move in sympathy. So what? Get your last bite. Fact set, very clear on something. Earnings are going to be down this year. The market has not adjusted for that at all. So we'll see. It would be nice if we got one good correction that we could buy into and just look forward to when the Fed is going to start loosening up. I think the market is too far ahead. Doesn't make it wrong. It just means they're early, unless they change the shape of what's coming. They push it up before they push it down. We'll see. If you stick with good ideas, it doesn't matter. They work out anyway, regardless of the macro. There is a school of thought that we're going to see a 15 to 20% up year in stocks this year. Could be. That's probably bad for next year if it happens then. Talked about this index a couple of weeks ago, the Treasury Volatility Index, how it spiked, got stocks to come down, but now the volatility is coming down in bonds, stock market rallies up. I'll ask you a question. Do you think this was the high point in volatility in bonds? I don't. I think there's one more spike in bond volatility. And it's because Fed can't loosen fast enough and doesn't want to, which means that this wall of commercial maturities over the next year or two, stuff that was written in 2018 and 2019 is coming due this year and next year, right? They're on a 5-year cycle. 85% of all commercial debt's on 5-year notes. Banks are going to have a problem with that. And the Biden administration has made it very clear, if you're a bank and you get upside down, your stock's going to zero. And we're taking over the bank, and we're going to help the depositors, and we're going to do everything that everybody said in 2008 and 9 that is what they wanted. They don't want the bankers and the shareholders bailed out. They want mom and pa taken care of. And mom and pa in this case is going to include a lot of corporations, but it's not going to be the bankers or the bank stock, which is why I haven't jumped into the regional bank ETF just yet. I've sold those puts on First Republic. I think that KRE probably got one more level down to go, but we'll see. There you go. It's been jitterbugging right there, right, for a little while. I really do think that KRE needs to get down into the middle 30s. Splitting hairs maybe, but this chart to me looks like it has one more coming. This is not the consolidation in prices where everything narrows that you really want to see. This looks like down, lower low to me. That's what it looks like. So the wild card on the economy is the debt limit fight. If the Republicans force us to default, you are going to see a panic. And then for sure, we are dealing with the potential of the Jeremy Grantham, Nouriel Roubini, Armageddon zombie apocalypse. If the Republicans in Congress do that, hopefully they all lose next year, because it would be the most irresponsible thing done in the history of American economics. Can I be any stronger on that? It'd be worse than anything Congress has ever done before. Now, do I think it's going to happen? No. I think there's 20 Congress people on the Republican side who will just say, look, we're raising the debt ceiling. Screw you, Kevin McCarthy, and, Knucklehead Green or whatever her name is, and all the other wackadoodles on the far right that somehow have gotten into Congress. Please, dear Republican friends, start electing people who are more in the form of John McCain and Bob Dole than some of these right-wing whack jobs right now. Because not only are they stupid, they're greedy, dishonest fuck. That's how bad they are. I never thought I would think that way, that I'd be okay with one of them stroking out. In any case, more importantly, and you have 2 hours to do this if you're listening live, AST Space Mobile, if you've been following the chat room and Margin of Safety in particular, we have somebody who's been really good about keeping us up to date on this company. Everything that I told you about this company last year is coming true right now. Just like almost everything I've told you about almost every other company that we're invested in is going to come true in the next couple of years. Just don't get shaken out of the trees. AST Space Mobile has an announcement tomorrow. It's probably going to be pretty good. I don't know if it's their hello Watson moment. I need you. Watson, I need you. Watson, I can hear you. Is that what it was? But if it is, then today was your last chance to buy this stock cheap. I bought shares in AST Space Mobile just before we went on air today, increased my position by about 1/3. I also was able to sell the August $7.50 puts for $2.45. I was trying to get $2.50, and I was just afraid I wasn't going to get it, so I took the $2.45, which means that if they announce that there's going to be a delay tomorrow and the stock drops, I'll end up getting it for $5.05, and it's like $6.40 right now. AST Space Mobile is about $6.40 right now. If you don't have a full position, I think you should get there fast, like today. Like, start clicking away right now. And again, I liked selling those puts because I just think that they're going to expire, and I'm going to make, I got to hold $750 in cash for those puts, but I'm going to get $2.45. I'm going to get a 30% gain between now and August. I can live with that. Pretty good return on my money market money. And again, the reason you sell puts and you stagger them out several months, and I usually wouldn't go that far out, but I'm cautious on what's going to happen in the second and third quarter. I like having money become freed up. So if I can store my money with a 30% gain in 4 or 5 months, not a bad deal. The downside is I might have to spend that money on the stock, in which case AST Space Mobile, which is trading for $6.40 today, I would get on a net cost of $5.05. Look, the AST Space Mobile technology is going to work. I think that's a foregone conclusion at this point. The question is when and how fast can they get the satellites up? Government is working with them. They got a DoD contract. That's it. Defense Department says this is a thing. It's all you need to know. Military industrial complex. Some guy named Eisenhower told us about it. And it's been true ever since. It's been true since before him. If you have not read their presentation, their investor presentation, do it. You have to put some work into your investing. So if you haven't, do it. The upside on this stock isn't tenfold. It isn't 20-fold. It isn't 30x. It's way higher. This company could be collecting royalties from many, many major telecoms. And for AT&T, it means that American company can go global. I mean, really global. There are people all over the world who would love to have an AT&T cell phone because of its link to America. So AT&T and AST Space Mobile, you really ought to own. After this call tomorrow, I'm going to write an article. And actually, the title of the article might be American Tower bought AST Space Mobile stock, and you should too, because they did. American Tower bought stock in this company. They own 5% of it. Go buy the stock right now. All right. Have a great day. I still have 1,000 things cooking, and we'll start popping them out. Actually, got one coming out shortly after this is done. All right. Take care.